Stocks rise on Wall Street ahead of the U.S. FOMC meet, which will get underway today. The Fed is largely expected to hold rates steady, with inflation still coming in above estimates. Asian markets trade largely lower ahead of the Bank of Japan's policy decision. Despite a strong handover from Wall Street, the GIFT Nifty 2 is indicating a weak start for the Indian market. Crude prices rise to 4-month highs. Brent nears $87 a barrel as exports from Iraq and Saudi Arabia dip. Expectations of stronger demand from China and the United States also drives prices higher. Gold prices recover from weekly lows ahead of a series of central bank decisions this week. Tata Sons joins the spate of parent companies cashing in on high Indian valuations, looks to raise over $1 billion by selling 0.65% stake in TCS. Sale to be executed through block deals at 4,001 rupees per share. Move is also likely in line with Tata Sons' plan to cut debt to comply with RBI's upper layer NBFC regulations. Hi everyone, good morning. In the Mumbai News Center, I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines and some big one at that. Of course, the central bank action globally is something that is taking center stage. So before we talk about that, let's take a look at what the Asian markets are doing. The Bank of Japan decision is expected in a few minutes itself, and that is something that the street is focusing on. So despite a decent handover from Wall Street, the Asian markets, they are nervous ahead of that. The Hang Seng is down 193 points. We have the Taiwanese index, which is sitting with cuts of around 80 points. And across the Asian screen, there is red actually. So if we look at Kospi, that one is down 1.3%. Nikkei is the one which is down 0.7%. And GIFT Nifty, that will come up for you on the screen. And that one is indicating that the start for our markets could be in the red again. 76 points lower is what the implied open is suggesting as far as Nifty Bank is concerned. But as I said, it's a big day for equities in Asia, particularly in Japan, as the Bank of Japan is widely expected to end its negative interest rate regime and hike rates for the first time in 17 years. CNBC's Kaori Enjoji gets us a quick pulse check from outside the Bank of Japan building in Tokyo.
On March 19th, 2024, this day could go down in the books, in the history books, in terms of Japanese economic policy. What's happening here at the Bank of Japan, as you know, 9 board members have been huddled around a round desk, literally inside this building, all through Monday and throughout this morning. And speculation is rife, and I do not use those 3 words lightly. Speculation is rife that today could mark the day that they end this grand experiment that they have been on. Negative interest rates has been an outlier in terms of Japanese economic policy, but the conditions may be right. Now look, all along, this is what's been happening. Prices have been rising for months now, and the Bank of Japan, the governor, has been saying that 2 conditions have to be in place. 1, the prices have to be rising, and they have been, and the second, wages have to go up in tandem. So you know on Friday that Rengo, which is the largest labor union here in Japan, agreed to a wage hike of more than 5%. So by that same logic, condition 1 is there, condition 2 is there. So the logical thinking would be, why not now? Isn't it now or never? And that's the situation I find myself here in front of the Bank of Japan, guys.
Okay, speculation is rife. Of course, that's the big event we'll be watching out for. But let's talk about the U.S. markets now. Wall Street ended Monday's trading session higher. The Dow gained 75 points, while the S&P finished 0.63% higher. And the tech-heavy index, that is the Nasdaq, advanced 130 points. CNBC's Steve Kovac gets us a wrap of all the action on Wall Street.
U.S. markets were up across the major indexes Monday as Google helped drive tech stocks higher after a report of a potential Apple partnership. The Dow was up 76 points, the S&P 500 up 32 points, and the tech-heavy Nasdaq up 130 points. A potential blockbuster artificial intelligence agreement between tech giants Apple and Google. According to a Bloomberg report, Apple is in talks to build Google's Gemini AI engine into future iPhones. If the partnership were to go through, Gemini could help power some of the AI features coming to iPhones later this year, when Apple is expected to release its new operating system. The deal would give Gemini a foothold with billions of potential iPhone users, but could draw extra scrutiny of both companies from antitrust regulators if the deal were to be finalized. Sports Illustrated has a new publisher. The iconic magazine said today it struck a deal with digital media company Minute Media to operate the magazine for at least 10 years. In a statement, Minute Media, which is best known for the Players Tribune and Fansided, said it would take on all of Sports Illustrated's digital and print operations. That includes continuing the print edition. The announcement comes after months of uncertainty for SI, which published its first issue 70 years ago. That's what's happening here in the U.S. Back to you, Mumbai.
Okay, all right, let's stay with the U.S. market because investors will also be looking ahead to the Federal Reserve's two-day policy meeting that will start today. Let's listen into some expectations from the Fed's policy meeting.
The last two inflation reports were a little bit disappointing. The economy is doing well, which is a good thing, but inflation appears perhaps to be stuck somewhat above the 2%. So I think they should be in a wait-and-see mode, and I think they're going to continue to signal no rush to cut, which might be a little disappointing to the market. The market was, getting itself comfortable with only 3 cuts, perhaps beginning in June, and this set of dots may indicate, maybe fewer cuts, maybe a little bit more delayed. And so, yeah, I do think that incoming data is probably going to weigh on some of the policymakers who are a little uncertain, and I think right now the data are not supporting an earlier start, probably supporting somewhat later start.
I think the Fed wants to avoid a mistake, and a mistake would be to cut rates too early, remove restrictiveness in the policy setting too early, and then have a resurgence of inflation. So I think the position of the committee is as long as the economy seems to be tolerating this level of interest rates, I think we'll stand pat and make sure when we make the move that we've got it right, make sure that, in fact, inflation is going to be on a path to 2%.
Okay, all right, it's time to get you the final update in our global market wrap this morning. European equities edged lower on Monday with the French CAC slipping 16 points, while both the German DAX and the British FTSE closed near the flat line with single-digit losses. The pan-European stock 600 also ended in the negative territory, dragged by telecom sector that declined 1.4%, marking its worst day in 3 months. In important macro cues from the region, inflation in the Eurozone came in higher as expected at an annual rate of 2.6% and 0.6% on a month-on-month basis in the month of February. Following the inflation print, ECB policymaker and Spain's central bank governor said the European Central Bank could start cutting rates in June itself. Okay, all right, that's all the global market action, but it's time for a short break. When we come back, we'll tell you how all these global cues will impact our own markets and talk about the market setup as well. Stay tuned. Welcome back. You're still tuned into Power Breakfast on CNBC TV18. This is time to welcome our research team. They're joining in what the trade setup is looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Hormaz, let me come across to you first up. Not looking like a really cheerful day for our own markets.
Morning, Sonal, and it does not look like that considering how the GIFT Nifty is trading. But the key thing to watch out for is that whether the Nifty continues to respect that support level of 21,900, which it has been doing over the last 5 trading sessions. And every time the Nifty has fallen towards those levels, it has managed to bounce back from that. And it's the 200-250 point range on the Nifty. Then even yesterday, it made a low of 21,916 and managed to rebound from those levels, eventually closing above 22,000. And the Nifty Bank is also following a similar pattern. So the good bit was that it somehow managed to hold on to that 46,000 mark on the downside and then staged a 500 point recovery from those levels and closed slightly negative. So it was the 7th straight day of losses for the Nifty Bank, but it was managed to close off the lowest point of the day. Now if you see, it's a very skewed market. On one side you would see the index heavyweights like HDFC Bank and others contributing towards the downside, Infosys and TCS. On the other side you would see Reliance and stocks like metals and auto names contributing towards the upside. But the key factor will be IT stocks, and those are being the key pressure points. They sold off slightly more towards the close of trade yesterday as well. So Nifty IT is a pressure point. The TCS block deal will be a market moving factor in today's trading session, but all eyes continue to remain on the global central banks. The Bank of Japan rate decision will be out in a few hours from now. The Federal Reserve, the two-day meeting begins today as well. The US markets were slightly positive yesterday, but the two-year yield yesterday was the highest since December. The five-year yield was at the highest since November, and at one point of time the Fed swap ratios were pointing off the odds for a June rate cut were less than 50%. So the street is penciling in for something from the Fed as well. So the gift nifty is not indicating a good start, but we'll see how the day unfolds. Back to you.
Okay, yes, there are a lot of cues that we are watching out for. But stocks that will be in focus today. Vamakshi is joining us with that list. Hi, Vamakshi. Good morning.
Well, good morning, Sonal. Let me first start off with TCS. We have a couple of news flows out here. Tata Sons is expected to divest nearly 0.64% equity in the company via block deals. The block deals, the offer price is at almost 4,001 per share, which is coming in at a discount of almost 3.6% to the current market price, and the total size of this block deal is expected to be around 9,200 crores. But apart from that, also watch out for Aditya Birla Sun Life, AMC as well as AB Capital. Both of these counters will be in focus because the promoters, that is AB Capital and Sun Life AMC Investments, are looking to divest nearly 11.5% stake in AB Sun Life today as well as tomorrow. The base size of this OFS is nearly 7% with 4.5% of the green shoe option. The floor price for this offer is at 450 rupees per share. Apart from that, AG Infra's JV with Stockwell Solar Services has received an LOA worth almost 1,026 crores from Jodhpur Vidyut Vitran Nigam. Tata Steel is the next one that we will be focusing on. Tata Steel UK has ceased operations of coke ovens at Port Talbot plant, Wales, and this is mainly on account of deterioration of operational stability. However, they will be increasing the imports of coal to coke in order to offset the impact of the coke oven closures. IOL Chemicals, that will be another counter that we will be watching out for. They have successfully completed the Brazilian Health Regulatory Agency's GMP audit, and that has been completed without any observations. Dishman Carbogenics, in focus on the back of some similar reasons. Carbogen Amex has completed Brazilian Regulatory Authority Agency's audit of its site in Shanghai, China without any observations. Paradeep Phosphates has shut down the ammonia and urea plants at Goa, and that is mainly on account of the breakdown of their synthesis gas compressor. Veritas India will also be in focus because in a consortium with Genesis International, they've gotten an LOA for a project with almost 155 crores from BMC. And lastly, we will be focusing on Aegis Logistics. Aegis Vopak Terminals, a subsidiary, has gone ahead and approved acquisition of the specialized storage terminals at Mangalore, resulting in capacity addition. The total investment is almost 75 crores with additional 50 crores required for capacity under construction.
Okay, all right. Thank you so much, Vamakshi. But let's talk about the FNO space as well. Mangalam is joining in with all cues from there. Hi, Mangalam. Good morning.
Good morning. So the Gift Nifty is indicating an 80-point downtick, as we all pointed out earlier as well. The important part is whether this will get bought into or not. Why do I say that? Because even as the market's been gradually grinding lower, it's respecting the range. The Nifty as well. On Friday, defended the 50-day moving average. Yesterday, the low was 21,916 and the 50-day moving average is 21,917. So whether that dip that the Gift Nifty is suggesting gets bought into or not remains to be seen. On the way up, however, the 20-day moving average proves to be a bit of a resistance. And that's the same case for the Nifty Bank as well, where the 50-day moving average was an important support. We managed to hold on above that yesterday. 46,489 is where it stands at. On the way up, 47,000 looks like a bit of a resistance. With the levels out of the way, let's talk about what the FIs did in the cash market. They sold about 2,000 odd crores. Today, the institutional figures will be skewed because of the TCS deal. And in index futures, however, they're again adding shorts, and they've constantly been adding shorts for the last 5 or 6 trading sessions. Yesterday as well, almost 200 crore worth short positions added, 4,000 short contracts. And what this has done is that if you look at it from the start of last week, March 12th, the FI long contracts were just around 43%, and now they're down to 37%. And short exposure increased from 30,000 contracts to 61,000 contracts. So in a matter of 5 days, the FI shorts have nearly doubled. It is Tuesday, so it's also the financial Nifty expiry on Nifty Financial Services. To that extent, it will be important to track HDFC Bank in the second half, and a bunch of other stocks we'll be watching out for. Balrampur Chini, for one, enters FNO ban, and the second one is Tata Steel. All the steel stocks did extremely well yesterday, and we did see a fair amount of short covering on Tata Steel, so that's one stock I'll be watching out for.
Oh yes, that'll be the stock that'll be in focus. Thank you so much, guys, for joining us and prepping us up for this trading day ahead. We'll do one thing, we'll slip into a break now. When we come back, we'll get you all the cues from the commodities market, so stay tuned for that. Welcome back. You're still tuned into Power Breakfast on CNBC TV18. It's time to talk about what's happening in the world of commodities. Manisha Gupta is joining us with all the update as always. Hi Manisha, good morning.
Morning, Sonal. Thank you for that. I'll start with crude oil prices, where we have seen 2% of gains overnight. It's trading at a 5-month highs right now. There are various supportive factors that are keeping the crude oil prices in the light there. Well, to begin with, Iraq and Saudi Arabia are looking to cut exports going forward. Markets also are reacting to better than expected China data. So whether it has been about factory output, retail sales, production numbers, all of that for the month of Jan and Feb has been on the higher side on a year-on-year basis. So the markets do get a support from the fact that China data is getting evenly better on a year-on-year basis here. Apart from that, you also are looking at persistent supply disruptions in the Middle East, increased U.S. refinery activity, and the expectation that the U.S. summer demand also will start on a better note. So all of that has been keeping the markets higher. Not just crude, copper is trading at around 11-month highs. You have tin trading at an 8-month highs. Gold price is also holding steady around $21.50 an ounce ahead of the U.S. Fed meeting. I mean, that's going to be the next big point to watch out for.
Okay, all right. Yes, so a lot of action in the global markets that will keep the commodity market in focus as well. Let's stay with commodities and get you some important opinion on the energy complex, the road ahead for copper prices and more coming in from BofA Securities.
There's been a lot of attacks on Russian refinery infrastructure in particular. And remember, we're now going into the driving season. So over the course of the next few months, we're going to see a big buildup in inventories of gasoline, of diesel, and of course, to get ready for the season. So of course, if those refineries are damaged, that's going to pressure the entire complex up, which is exactly what we're seeing today. Well, I think there's a risk that certainly both gasoline and diesel prices chase each other up into the summer because we start to run tight on refining capacity. We've had, since we came out of COVID, we've had 3 bumper travel seasons. 21 was a little milder, but then 22 was great, 23 was phenomenal. And I still think 2024 is going to be very, very strong for tourism, whether it is road transportation or jet fuel demand, so air transportation. So we still see a strong summer season ahead. We agree. We think there's a restocking cycle. The one thing we need to get copper into a much firmer footing from here, it's interest rates to go down. Now, the market's expecting 3 cuts. We are at Bank of America expecting 3 interest rate cuts starting in June. If that plays out, copper will have a lot of upside pressure because inventories of both finished goods but also raw materials are actually quite low. Remember that normally when we go into the end of a business cycle, companies draw down their inventories on high interest rates only to see sales crush. But that's not what we expect. We expect sales to firm up as rates come down. So we think copper will do well, and we think green energy transition demand for copper will be very strong going forward.
Okay, all right. That's the outlook on commodities. But with that, we'll take your leave on Power Breakfast today. But do stay tuned. Bazaar Morning Call comes up next with all the market action.